Peace. Live and direct from the borough of Manhattan. It's Absolute of the Absolute Boss Collective coming at you with a brand new video. Today we're going to get into it talking about the whole drama with Robinhood and GameStop. Now, before we get into the reason of why I have a 50-50 opinion on what Robinhood did, we're going to talk about some of the lessons that you can learn from this whole situation. If you brand new to the channel, brand new to the mission, hit that subscribe button so you could be put into the loop of what's going on in the stock market and the option world, whatever it is dealing with trading. Holla at your boy so I can bring you up to speed. Now, without further ado, let's get into the whole drama. First and foremost, I want to give a super big shout out to all of the folks over at WallStreetBets. Listen, son, for real, when you talking about hustling and sticking it to the man, y'all did y'all thing. And for that, I applaud y'all. That's some real gangster stuff that y'all did right there. And I respect that and I salute y'all for that. Now, I also want to add into that, I did a little research. They really like a YOLO type of camp. YOLO meaning you only live once. So the folks over there are trading options with a short-term expiry. They're going all in. They're going hard. They're doing what they got to do to try to get these big, huge, humongous wins. And I respect that. During my journey, I have definitely used short-term options. I definitely swung for the fences on a lot of my trades. And I can respect that idea. You know what I'm saying? And if you have the knowledge of trading those high risk instruments, then do your thing. I respect that. You know what I'm saying? Everybody has a different risk tolerance. And if you can put, $2,000-$3,000 into a trade, you know what I'm saying, with a very short term for a turnaround. I'm talking about buying it, Friday at 9:30, and you got to win by 4. And if you don't, you probably lose your whole investment. Some people like to do that, and I can understand that. At the same time, I represent high probability trades. I like that better than the high risk trades because of my tolerance. You know what I'm saying? Like, I want to be able to place a trade and go handle my business. And if I'm wrong, if I'm early to the game or whatever, I have time for my trade to turn around. When you trade in a short-term option, hey, if it doesn't hit by that 4 o'clock, trust me, that thing is going to zero. You know what I'm saying? And that's the whole WallStreetBets style. One of the other things that I've seen is a lot of times they will not close a trade even if they're taking a loss. Okay? Even if it's an unsurmountable loss, a devastating loss, they're going to hold on for dear life, hoping that it'll turn around. Okay? That's not a trading strategy. That's not. Some people have that tolerance. Some people allocate a certain amount of capital and say, yo, I got 10,000 as risk capital. And they'll put the 10,000 in, and if it goes up, goes down, whatever, they don't care. You know what I'm saying? Because they're prepared to lose that entire investment. And I can respect that. Now, let's go into some of the lessons that you can learn, as well as some of the reasons why I have a 50-50 opinion on what Robinhood did. Okay, one of the most important things in this game is risk management. Okay? So if you put $500 into a trade and say I'm willing to lose $50, if I'm wrong, and I want to earn $100 if I'm right. That's a 2-to-1 risk to reward ratio, and that's the way that you should be looking at your trades. Okay, if you want to take bigger risk and you're comfortable with losing your entire investment, then that's on you. But if you know that going in the beginning, then it's all good. You could put 10,000 in a trade and say, hey, if I lose it, I lose it. I'm prepared to do that. A lot of people are not, especially retail investors and people that are just getting in on the hype. Those that have not done their homework. Okay? Now, one of the things I came across in the Wall Street's bets situation is that, let me give you a little backstory for those that don't know what's really happened. There were about 13 different stocks with a high level of short interest, meaning a lot of people, institutions, mainly institutions, bet against these particular stocks or tickers and bet that the price would go down. Someone in that Wall Street Bets community found this out, and the method is for them to buy the stock to push the price higher, so that these institutions that shorted these instruments or these stocks would be forced to cover. And here we have our first term that you may not be aware of. It's called a short squeeze. What that means is there's people betting against a particular stock, betting that the price would go down. And if that price is not going down, the further and further it goes up, which means it's going against those people's positions, it squeezes them. Okay? And what we have here with GameStop is an epic short squeeze. Okay? I mean, the stock was up like about 400%. Well, this week I know it went up 400%. If we look at the whole term, just go look at the chart. Look at the stock chart. In November, this thing was trading about $10. Now it's $400. Look at, or it was $400 at some point during the course of the week. Look at Microsoft. Microsoft makes computers and makes video games, and they're not even $400. Okay? So this is a unprecedented situation that took place. Now, on Wall Street Bets, they were saying they prefer or they suggest that you use Robinhood because Robinhood does not charge commissions. It does not charge commissions for stock trades, and it does not charge commissions for options. Okay? So Robinhood is the preferred platform or broker for these people on Wall Street Bets that are running these operations. Now, you mean to tell me that it is perfectly fine for a bunch of people to target a particular institution? That's fine. That's okay. It's a free market, right? So it's okay for them to do that. But it's not okay for Robinhood to protect themselves? Okay? They have a fiduciary responsibility to themselves as a company. And if we, our major clients or major positions that are being held at our brokerage are going against us or going against these clients, okay, that's a risk. Risk management. As a trader, we just discussed that. Risk management. You have to be prepared anytime you place a trade, okay, to accept a certain amount of loss. And if you're not doing that, if you're not going into the trade knowing, hey, if I'm wrong, I'm going to lose this amount and I'm okay with that. If you're not approaching a trade that way, you're gambling. That's not trading. Okay? So that's my number one reason of why I'm 50-50 on this Robinhood situation. Okay? They do have a right to protect themselves. Okay? They also tell you in their agreement when you sign up All of that stuff that we bypass when we doing whatever we do, it says that they have the right to suspend trading. That's also happens with the New York Stock Exchange. If there is a dramatic rise or drop in a price, they will halt a stock for 15 minutes. If it drops a certain percentage, they'll halt it for 15 minutes. Why? Too much is going on, too much volatility. So they'll halt it in an effort to get control of the situation or let it calm down. Okay? Number two, Robinhood is not the only one that restricted trading in those issues. Other brokerages did it as well. People jumped on the fact that Robinhood is supposed to be taken from the rich and given to the poor, or giving them the opportunity to trade, and that's fine. Okay? But other people did it besides just Robinhood. Another point is that if you are about that life, if you're about this life of trading, okay, then that means you have to be resourceful. Okay, that's number one. You have to be resourceful. So if you're being resourceful, how can you be a trader with just one trading account? Okay, maybe you got into the game through Robinhood, but if you're really living this life, you should have other options. So if somebody goes and decides to halt a particular thing, you just roll to plan B, back up. Okay? If you're not, then you should not have been trading a high volatility instrument. That the momentum is through the roof for no reason at all. I mean, we know the reason was WallStreetBets forcing these people into the corner, but there's no fundamental reason of why that stock is rising at that rate in that short period of time. It's crazy. It's insane. Okay? So my point is, by the time they restrict, if you was really about this life and really bubbling with this stock, GameStop, and they halted it, you should have, number one, you should have already been in and out of the trade by the time they halted it. When they halted it on Thursday, it wasn't, they allowed you to sell, but they didn't allow you to buy. Okay? Now, it could also be that maybe you bought at a particular price, and at some point during that time of the halt, the price dropped, and you may wanted to get in and average down your position, lower your cost basis or something like that. And I understand that. However, again, if you did not have multiple trading accounts, if you're not able to stomach or manage the volatility of a particular issue, if you're panicking, trying to get out, trying to add more, whatever, maybe you should not be trading that instrument. Maybe that instrument is too volatile for you. Okay? Because anybody that knows this game knows that there's a certain amount of risk that's involved. Things happen. You know what I'm saying? There could have been a glitch or something like that. You can't panic in that situation. Okay? And that might be why some people are in their feelings about what Robinhood did. Now, I don't think that it's fair for them to pick and choose who can buy and sell. However, as a business, they can do whatever they want. And people say, oh, it's not fair, it's manipulation. When have you known there to be a level playing field in this game? There was never a level playing field to begin with. So we running up in there and we going and we trying to do what we got to do. We got to be prepared for the things that go on. Robinhood is not a stranger to controversy. You know what I'm saying? There was class action lawsuits against it. There was, they were selling order flow to different clearing houses and stuff like that. Look it up. So if they've had issues before, what makes you think that everything is transparent? It's not. Okay? Some people say, oh, it's the hedge funds that cause them to do it or whatever. They have a right as a business to do what they think is in the best interest of them. They have to preserve their business. It's not fair, but when has things been fair? Okay? And that's why if you're in this game, you have to know the ways around whatever may come up. Okay? Let's see what else we got here. Definitely. I took my notes. Okay, we got Finra fined. Well, first of all, payment for order flow that happened in October of 2018. Finra, the financial industry, fined them in 12/19 for failing to ensure that customers received the best price. Then we have the infinite cheat code situation, where some again with hustlers that figured out that you could buy a security, sell a covered call, then take that money from the covered call, buy more securities, and then keep doing that over and over because they didn't have some kind of glitch and they didn't have a restriction on the margin. So they kept doing that, and people made money out of that. Okay. Now what happened? When they found out, they stopped it immediately, but not before people were able to take advantage or exploit that. Okay. And then those people who did that, they froze their accounts or something like that. We had the outages, and I remember when the outage. I know one of the outages was in March or February. So one was in February, one was in March. And I remember when those outages transpired. It was during some tumultuous days. I mean, like we were crashing, we were opening down, we were gapping down huge numbers on those days, and there was an outage at Robinhood, and it was kind of messed up because let's say you had a short position, you were betting that the market would fall. The market was falling now, and you're like, yo, let me get in here and close these positions. You couldn't close them because you couldn't access the platform. Now that's messed up. However, Robinhood wasn't the only one where this happened. This happened at other brokerages before as well. It's something that happens. So again, you as a trader, you should be able to navigate any situation that comes up. There's two words. It's called due diligence. You do your due diligence. With GameStop, I'm not sure that everybody that was in that trade was doing due diligence on it. Some people are into it for the hype, which kind of, I see that as like a momentum stock, or it's acting as a momentum stock. And honestly, the reason why I decided to make a video for y'all is because I was having this conversation with my son, and he was kind of teasing me like, oh, because I went somewhere on one of those days, and he was like, you could have traded that, whatever. And I told him I would not have touched it. The reason why I would not have touched GameStop is because what is the company worth? That's number one. When you're trying to trade something, you want to know what is that company worth. You want to kind of have an idea of what it's worth. And I know it ain't worth $400 a share. And something that's rising like that, I'm not even taking that risk. Okay? I'm looking for high probability trades. Now, if I buy something that's up 400%, you mean to tell me it could fall 200% and still have a ways to go? I could buy something at $400 and it's worth $100? So I could lose $300 before this thing starts to hit support and start to go back. I'm not playing that game. I'm not. I was not even interested. Only thing I was interested in with GameStop was looking at the chart and watching the price action. So a couple of days I pulled it up to watch the chart, but I'm doing my other thing, bubbling my other trades. So I did look at it, but not as much as I would have liked because I was caught up doing my other trades. I'd rather do high probability trades and make my income that way as opposed to trying to get rich overnight on something that has no fundamental basis for the movement that we are seeing, if that makes sense to you. You know, I'm on the fence about the whole situation. You know what I mean? We're in a different time right now. A lot of people have come up. A lot of people, lost their jobs or haven't been working as much as they did pre pandemic. They had a lot of time. A lot of people got into this game. People want to sustain themselves. This is the best game in the whole world, actually, according to my opinion. You could pull money straight out of the air with it. So a lot of people are getting interested in it, and a lot of people do their homework. Look at me. I represent y'all. You know what I'm saying? I taught myself all of this. That's how I got here, and I went through all the ups and downs. Some of these similar type of things, and chasing stocks that's running and chasing what's hot for the day. And I don't really do that no more. We're dealing with human emotions. So human emotions cause people to act irrational. And if the person is acting irrational, you know what I'm saying, and causing all of this high volatility, I'm telling you, when I was trading Thursday, as a matter of fact, when I was trading Thursday, I'm in and out of trades usually in seconds. And I seen maybe it might have took a minute or so because my brokerage was slowed down. Okay? Interactive Brokers, which is one of the big dogs as far as, traders go. I think they're one of the best brokerage firms out there. But they also halted or restricted trades in those issues. Okay? Because it was too hot. It was crazy, son. It was crazy. Okay, and we're going to be mad at them for that? We're going to be mad at them because they got influential people that's calling them and maybe pressuring them, or maybe they down with them, and they saying, yo, son, I'm dying in this position right here. Can you help me out? It's not fair, but certainly these things happen. You know what I mean? These things happen. That's why you got the SEC and all these cats looking into the situation right now. One of my concerns is that they will allow people to go back and trade in it, and that's when it'll crash. I'm concerned about the little guy who just maybe heard his man's talking about it, or she heard her homegirl talking about it, and she downloaded the app so easy, and she decided to go buy this, and maybe her back is against the wall, or his back is against the wall, and they take their rent money, or they take their life savings and dump it into a stock that's, exhibiting irrational exuberance, that's going to the moon for no particular reason. They throw all their money in that and they lose that. Of course, that's that person's fault for not doing their homework. You know what I'm saying? But human emotions, you caught up in the frenzy and you want to get a piece of it. These things happen. Okay? I just wanted to jump in real quick and holler at y'all and let y'all know what my perspective is. You know what I'm saying? I'm 50-50. I love what WallStreetBets did and what that represents as far as the little guy taking on the big guy. I love that. However, I ain't got no problem with somebody protecting themselves and protecting their business interests. Okay? I think they have the full right to do that. And I think if you want to be adept in playing this game, you have to know that there's sharks out there, B. There's sharks out there. There's snakes out there, man. And you got to be prepared to deal with them no matter what. You know what I'm saying? I came to bring you the understanding, the clarity to understand how this thing is going. So depending on how you feel, you know what I'm saying? I don't want nobody to think I'm a sellout or none of that. You know what I'm saying? But I'm going to stand on my opinion. That's my opinion. So if you have a different opinion, hey, leave a comment below. We could discuss it. Let's be respectful of each other's views and stuff like that. But that's all I'm saying. Take this as a lesson to learn, to do your due diligence, okay? To consider values of a particular stock, to consider your risk tolerance. What are you willing to lose? Get yourself familiar with these terms, short squeeze and, puts and calls and momentum and bankruptcy. Okay, all of these different things that played with these 13 issues. I know it was BlackBerry, what's their name? Express. I remember I was looking at Express Wednesday. I don't know if it was Monday or something like that. And I looked at the stock and it was $2. And I was bugging like, yo, this thing's $2. I remember Express used to be popping. That used to be very popular for the ladies. The next day or 2 days later, I seen it up $4 pre-market. I didn't know that at that time that it was tied to this whole short squeeze phenomenon, or this short squeeze strategy that these guys was doing. You know what I'm saying? And I like that strategy. I think that's real cool. That's a good idea, really, to look at that and try to exploit that. You always want to follow big money. You know what I'm saying? But here's a situation where they went against the big money and forced the big money to play their game to their advantage. That's beautiful. That's like some Tyler Durden in the what you call a Fight Club type idea. You know what I'm saying? I'm feeling that. You know? So holla at me. Subscribe to the channel. Reach out to me. Absolute Boss Collective signing out. Peace.